Morgan Stanley's global chief economist, Seth Carpenter. What a pleasure to have you. Thanks so much for joining us.
It's great to be here.
We talk about the house view at Morgan Stanley quite a bit, given how resolute Mike Wilson's been in his market view, at least. but what do you see coming, and why do you think a soft landing's possible?
I mean, I think we should go back to the beginning of this rate hiking cycle, because we said from the beginning that a soft landing was the most likely outcome. For a long time, that was not a popular view, I have to say. But I think there are a few key components to it. First was the Fed's strategy. Just because they want to have a soft landing doesn't mean they're going to get it, but that was very much their intent. So I think earlier there was discussion, how is this time similar to or different from the 1970s and early 80s? And I think one of the key differences here is then Paul Volcker just want inflation down. If it was going to cause a recession, so be it. That is not the mindset that the Fed has had. And if you look at their own projections, they have said 3.5, 4 years to get inflation down is just fine. So that cautious approach is one part of it. The other part of it is the labor market. Went into COVID, lots of people lost their job, the economy collapsed. The economy rebounded much faster than the labor market did. And what that means is businesses are still at this point backfilling open positions, and that's given that extra resilience to the economy. And we think that fact is part of what is going to keep us from tipping over into recession. So you've got that extra resilience. Now, I think the other question, though, is the Fed done? Did today's retail sales data mean that they have to do a lot more? And there, we don't actually think so. We think they've done as much as they need to do. Clearly, they're going to be deliberating. They're going to be sifting through all of the data. But inflation has been trending down. It's been coming down, if I can toot our own horn just a little bit, every bit as fast as we expected it to. The job market, despite being resilient, if we look at the monthly prints, they are slower. If you just look at the trend, they're coming down. So they're going in the right direction. We're at an inflection point. It's not that everything is negative. It's not that everything is positive. You got the data going in different directions. That's what a soft landing is.
But you're sure that we've seen, I mean, no one expects inflation to go back up to 8%, but you're sure that it's not going to pop back up again?
If any economist tells you that they are sure, you need to walk away immediately. But I feel pretty good about it. Look, I mean, if we think about consumer goods, if we think about rent inflation, and then there are the other services, the first two are very clearly trending down. Goods inflation is outright negative, and we're still seeing that happen. Look at everything that's gone on with pricing in automobiles recently. Rent inflation, it's now a very well-trod path in markets about how the Bureau of Labor Statistics takes spot data and translates them into official statistics. That's going to be trending down for the next 6 months at least, if not 9 months. And so really where we're left is those other services outside of housing, and those bounce around a lot. So that's where the uncertainty is. That's where Chair Powell has been pointing. But if you look at the last 3 or 4 months, you've got some really soft prints, you got some sort of moderate prints. So am I 100% short? No. And like I said,
but doesn't it make you nervous that the data is coming in now stronger and hotter? And it's not just retail sales. I mentioned import prices as well, some of the other data, strong jobs market. For an economy that is, look, it takes sometimes a recession, as Volcker learned, to hurt inflation. Clearly that's not what's happening now, but they are trying to soften the economy. Even financial conditions have not been tight anymore.
So no two ways about it that there have been some strong pockets. I have to say, hat tip to Ellen Zentner and Sarah Wolf and my U.S. economics team. We were above consensus for today's retail sales report. Back to school, Prime Day, all of which clearly contributed there. So there's absolutely some pockets. There's no sense in which the economy is falling off of a cliff. But that's part of our soft landing approach. Is it going to accelerate from here? I don't think so. You talked about some of the mixed signals from the housing market. People are trapped in their housing, right? People who have 2.5% to 3% mortgages do not want to sell their houses unless they absolutely have to. That makes new homes, as a share of total home sales, go up as a share, but the overall level of housing activity, it dropped a lot. It's bounced off that bottom, but it is not surging back.